All eyes are going to be on the Fed this week, and a 25 basis point rate cut is expected. After this rate cut, I still think there's a chance for another 25 basis rate cut later this year, and I'm going to explain why. I'm also going to review what the market did this last week. We're going to take a look at how the week is setting up ahead. I'm going to review last week's pick, and then I'm going to run some stock searches, and I'm going to show you this week's pick. Stick around. I think you're really going to like it. But before we get into all that, I'd like to ask you to please subscribe to my YouTube channel. Yay! We made it above 25,000 subscribers. So thank you everyone for your support. Your comments and your thumbs up, they help me reach more traders. And that's really all I'm trying to do. Why do I think the Fed might cut interest rates another 25 basis points this year? Well, certainly I think their rhetoric for this meeting is going to be somewhat dovish. The government shutdown is part of that, and there's a two-pronged issue that they currently have right now. One is that the government shutdown is going to reduce economic activity. So the Fed wants to support the economy. That's one reason that they would cut. The other is that they have a mandate for full employment. That's one of their objectives. They aren't getting any data right now, so they don't really know what the labor conditions are. Erring on the side of caution makes sense to me. We have another issue. There have been a couple of subprime lenders, PrimaLend and Tricolor, who have recently gone under. When Zions Bank released their earnings and those write-downs, the financial stocks sold off hard. Now they have rebounded, but a lot of banks were hitting the Fed's overnight repo facility to the tune of about $15 billion. So that's usually a sign that there could be some liquidity issues. All things considered, I think the Fed has plenty of breathing room. Plus, we got the CPI on Friday and it came in better than feared. 0.2% for the core, 0.3% overall. That gives them latitude to ease, and I believe that is going to be market friendly. Market certainly rallied on Friday on that lighter than expected CPI, but we'll get into market analysis in just a bit. Let's take a look at last week's pick. It was J&J. This is a difficult time to take swing trades because we've got earnings announcements and we don't hold over those earnings announcements. We trade before, we trade after. So for longer term swing trades, right now, we're trying to navigate around all these earnings. And this is going to be a really big week for earnings announcements. I like the fact that J&J had announced earnings last week. The reaction was pretty decent. The stock was inching towards a new all-time high, and it was above AVGO. So I liked all those things. The option implied volatilities were relatively cheap, so we're able to enter a call debit spread. We bought the November 21st, 190 calls, and we sold the 195, so I was able to put that trade on for $3 on Monday. And I checked it was trading around $2.30 today at the close. Previously, it was right at about that $3 level, but you can see how the stock did sell off a little bit on Friday, and it closed below AVGO. Okay, so I'm not crazy about that. I'm not panicked about this position because we still have another month left for this trade. Where would I stop it out? Well, that low from the earnings reaction was 185, so I would want to see a close, not it trades below. It has to close below 185. That's a pretty long distance away. I don't think the stock is going to get there. I want to give it some latitude to move around. It's just compressing right now. After a nice run up like this, there's still some profit taking that has to be worked off. And once it is worked off, I expect it to continue to move higher. What would my target be for the position? Well, I'd like to sell it for $3.60. That'd be a 60-cent profit, 20% return. So that would be my target for that position. Now, if another couple of weeks go by and those 195 calls are trading for 50 or 60 cents and the stock is still in this compression, I would probably buy those back because they're not offering the position very much in terms of protection. That's what I'd be looking for. We got plenty of time on this trade. There's no reason to panic. I still like the pick. What happened last week? What kind of news did we have? What was the price action? Well, you can see here that we had this really long red candle. This is from October 10th. This was the news that Trump was going to add another 100% tariff on top of China. They were restricting rare earth minerals. The market freaked out, sold off down to the 50-day moving average. And then we spent a lot of time around AVGO, up, down, all over the board. And then this week, we started to inch our way higher. And Friday, pretty surprisingly, the market broke out to a new all-time high. Now, this wasn't particularly strong price action, and there wasn't any news to really drive it. Yes, the CPI came in at 0.3%. As I'd mentioned earlier, maybe that paves the way for the Fed to cut a second time this year. I'm not sure what the thinking was because the market was already up before that CPI number came out. In general, there are not a lot of sellers right now, and that's one of the primary problems. When there aren't a lot of sellers, then the market can move higher on very light volume. And in this particular case, the market just kind of popped up. We'll take a look at the 5-minute chart. And then it sat there. It didn't do anything. And you can see after hours here, I'm going to take that off. But you'll see the market gapped up, and then we traded in a very tight range the entire day. Buyers and sellers were paired off. The volume was extremely light all day Friday. So how do I justify that? Well, these gains can quickly be stripped away as far as I'm concerned because it came on light volume. It was all fluff. There was confirmation that Xi and Trump are going to meet in South Korea on October 30th. Okay, well, that's pretty good news, but there's really no substance behind it because they've been going back and forth and talking. Both countries need each other. So the fact that they're talking, that's good news, but there is no trade deal per se. And China is kind of playing hardball right now. They know that they have the rare earth minerals that everyone else needs for their chip manufacturing and all the other technology, and they control 90 to 95% of the world's rare earth supply. Very important for them to talk. I don't know that we're going to have a lot of details coming out of it, but the rhetoric is likely to be positive. That was one reason that the market rallied. We did have earnings news. So we heard from IBM, we heard from Tesla, Netflix, Texas Instruments. Those earnings announcements in general, I'd have to categorize them as fairly market neutral. We had some that were up, some that were down slightly. So not a large market impact. And you can see that up until Friday, the market was just kind of waffling around. But that is going to change next week. As far as the things that we've got on tap for next week, well, first and foremost, we have this market breakout. Nice. Let's see if those gains hold. So support is going to be at this previous high right here, which is roughly about 674 or so. So we want to see that preserved. Good chance that we're going to test it. How do you know that, Pete? Well, usually when you have a breakout, you're going to get a tiny little retracement. You're going to test the breakout. What would we like to see? We'd like to see the market fly off of that 674 level because it's going to be a sign that buyers are interested in buying at that level. The breakout is tested and we fly off of it. So that's the price action that you should be watching for. That little dip is going to give us an opportunity to perhaps get this week's trade off. What kind of news do we have? Well, Tuesday and Wednesday, because we do have the FOMC statement on Wednesday, those days tend to be relatively lackluster. And we don't have a slew of economic reports coming out because the government's shut down. So we aren't really getting any news that way. ADP would be one piece of information that the Fed could latch onto, but that's not coming out until November 5th. So after this week, after the FOMC statement, we also on November 6th have the Challenger Grain Christmas number. So again, these are all still quite a ways out. We don't have any real economic data points to look at, but we do have some major earnings coming up. Google, we've got Meta, we have Microsoft, and we also have GLW posting results. Those are all big tech stocks that are going to drive the price action for the market. So those earnings reactions are going to be very important. Are those stocks going to be able to rally? Don't know. A lot of them have already moved higher, and that's going to be very telling for us. Is there a lot of gas left in the tank? Now, the one thing that has changed over the course of the last week is that we have transitioned from a period of seasonal weakness to a period of seasonal strength. This is when asset managers like to buy the market. They want to be long. They are not sellers. And the reason for that is that they like to mark up their portfolios into year end. That's why we have year end rallies. And it's so powerful that one of my trading axioms is that I do not short in November and December. I don't have to be long. I can be in cash, but I do not short. And that trading rule has served me very, very well. Market, in my opinion, is going to gradually float higher. There's nothing to stand in the way right now. Those are the types of events that I see playing out this week. It's going to be earnings and interest rates. That's what drives the market anyway. So we've got a lot of it coming up. If that Fed statement has soft rhetoric, dovish rhetoric, indicating that there could be another rate cut, I think the market's going to feel really good about that heading into year end. Let's take a look at some scans, and I'm going to put up custom search in Option Stalker Pro, and I'll show you the type of stock that I'm looking for and some of the criteria that I'm using to find it. So again, the first thing that I'm looking for is show me a stock that is not reporting earnings in the next 20 days. Okay, I want to go well beyond these earnings releases. There are not going to be a lot of stocks just for that reason. This is one of my primary criteria right here. Let me get this so you can see it well. No earnings within today to 20 days out. That's good because I'm not gonzo with this market rally. I'm not bye, gotta have them. I don't know what the Fed's going to be doing. I don't know what those earnings reactions are going to be. I really didn't feel like that breakout on Friday was anything special. It gapped up and then it just sat there all day on minuscule volume. Okay, well, that's not something that I'm going to really get behind strongly. Now, if the earnings come out this week and we get that little pullback that tests the prior high and we fly off of it, all right, I can get more bullish, especially now that I'll have more stocks to look at after these earnings announcements. So what else would I like to see? Well, of course, I'd like to see relative strength on a D1 basis. I'm also looking for some higher option implied volatilities, something above 35 and less than 100. So I don't want anything super ridiculous out there. That's a wide range. No ETFs. And I'm looking for decent option liquidity because I am going to be doing an option trade this week. A rating of -3 is pretty decent. Anything around 0 is going to be fairly liquid. A value of 10 would be extremely liquid, like the SPY. I'd also like to make sure that the stock is currently in an uptrend. So it's above the 200-day, the 100-day, and the 50-day moving averages. And I'd also like to see it above AVWAP-E, because that tells me that in general, the stock has been able to advance from where it released its previous earnings. So there's been a positive general reaction for that stock during the course of the last quarter. And when I take a look at these stocks, I can go through this list and I can look for really good candidates. Now, some of these have just announced in the course of the last week or two, and that's why they're on the list. So no, they are not announcing in the next 20 days because they just announced earnings. So this is a really good filter. I clicked through all these candidates and there were a couple of nice ones that stood out to me, but one that I liked in particular, and that was AVGO. So let's take a look at that stock and why I like it. So I'm going to move it off screen and then we're going to take a look at the stock first. Here's what I like about it. You can see this earnings announcement here. The red line is AVWAP-E. So this is where all of the people that have been buying it since that last earnings announcement, that's their average price. It's average volume weighted price is what that stands for. You can see 200-day, 100-day, 50-day moving average. Okay, these are all nice. You can see the stock's got relative strength here. You can also visually draw a line horizontally, and you can see that this breakout is just below this level right here and this support level right here. If I hover over it, you can see that that price level is about $325. It's also below the 50-day moving average. So I've got multiple levels of support here. I have AVGO that I can be leaning on. I have the 50-day moving average that I can be leaning on. And I have horizontal support all the way down to that 325 level. I do also have one other piece of information, and that is that LRCX, which is in the chip space, has released. TSM has released earnings. Intel has released earnings. So all of these companies are semiconductor manufacturers. So the whole sector has actually held up really well. And when you think about it, I mean, what's driving the market right now? AI. Everybody loves this AI theme. And if I hover over the E, I can see that AVGO does not announce earnings until December 12th. So I've got plenty of time to sell this spread. When I'm selling out of the money bullish put spreads, I want to stay 4 weeks and in. Why? Because I want to take advantage of accelerated time premium decay. Well, why am I not just buying this stock? Because I don't really trust the market right now. I don't have a lot of confidence in this. Yes, there are a lot of good things that are happening. We've got seasonal bullishness, but this is choppy, chunky price action in here. This does not excite me. And a big drop like that, and you've got one day we're going to smash China, and China's our enemy, and the next day Xi is our friend. And, you know, there's just a lot of volatility and uncertainty right now. You've got some issues in subprime lenders. So I'm not gonzo with this rally. Okay. Well, what would have gotten me gonzo? When would Pete have actually gone, yeah, we got to buy this market? I needed to see a pullback in August and September. We had all the information that should have led, in my opinion, to a nice little pullback in August and September. And so we never saw one, and we never saw one. And if we did have that pullback and we established support, let's say at the 100-day moving average, and now we were down at the 100-day moving average, we had tested it, and now we were starting to come off of the 100-day moving average, heading into year end, you bet I would have been bullish, and you bet that I would have been buying some calls out there. But we don't have that set up right now. We've got just this choppy, chunky, patchy kind of price action with lots of newsy stuff coming out. So I'm going to play it safe. I'm going to distance myself from the action. And my market confidence dictates everything that I do. Now, you might be bullish as all get out, and you might be really confident in that analysis. Well, good for you. Then you should not do this strategy. You should be looking for more bullish strategies. You should be out there buying call spreads. You should be out there buying in the money calls and being aggressive with it. For me personally, I'm going to play it safe. This has continued to work well. If you look at my previous videos over the course of the last 3 months or so, I have been selling in all those videos out of the money naked puts, and they've been expiring every week. That strategy has worked out well for me. I've been making decent money, excellent returns on that, and I haven't been sweating any of these moves at all. This particular strategy, I want to make sure that I've got multiple layers of support. I've already explained the ones that I have. I've got AVWAP-E, I have the 50-day moving average, and I have horizontal support. And the reason that I want to have those support levels is because that's where buyers are going to come in. That's what support means. So I would expect to see some buying here and some buying here and some buying here. Well, during all of those moves lower, if the stock does that, I'm able to monitor each one of these levels, and I'm expecting them to hold. So that continually increases my probability of success. And that's what this is all about. So down to the 325 level, which is almost to that previous breakout, yeah, I'm feeling pretty good about this spread. Now I just have to see if I can get the credit that I need. Let's bring this up and let's take a look at where that spread might be trading. So this is the November 21st expiration, and we're going to go down to the 325 puts. That's what we're selling, and we're going to be buying the 320s. So there's 5 points between the strike prices. I want to get at least $1 credit for that. So whatever the difference in the strike prices is, I want to get 20% of that. If I'm able to do that, then I'm going to generate a 25% return because I only have to put up $4. $5 between the strike prices, $1 credit received. 1 divided by 4 is 25%. So I'll make a 25% return on this if the spread expires worthless on November 21st. That's a really decent return, and I'm way the heck away from the current price. Where is this spread currently trading? It's 70 cents bid, offered at 135. So $1 is right between the bid ask. Wow, Pete, nobody ever gets filled between the bid ask like that. You're right. You are exactly right. That's why having this little retest in here Monday or Tuesday when we come in, the market goes, that was kind of a fluffy move. There really wasn't any follow through to it. There was some resistance up there. Let's see if this 674 level actually holds. Well, that would be a 25-point pullback in the S&P. It may only dip there briefly, but any little kind of pullback like that is probably going to get you filled on this spread. And if it does, that's good because we're going to be in at a really good price. And chip stocks have done very, very well. So I feel confident about this particular trade. This is the way that I'd be approaching the market right now once we have some clarity. So as I'd mentioned, once we know what the Fed's going to do, once we know if there's going to be another possible 25 basis point rate cut, once we hear what happens with Xi and Trump, once we have earnings from Meta, Microsoft, Google, those companies are all going to be announcing this week. We're going to have more clarity. When we have clarity, our confidence goes up and our odds go up. And then we can decide if we want to be more aggressive with our trades. So that's how I'm going to be playing it. Those are your marching orders for this week. Again, thank you everyone for helping me get to the 25,000 subscriber milestone. Let's keep it going. Please tell other traders about the channel. Trade well. We will see you this week. And I'm going to be doing a live event before the FOMC statement with Harry. So please make sure to tune in. We'll see you then. See how we trade live every day and take our 14-day free trial. I won't even ask you for a credit card. Dive into the action and trade alongside of us. Your downside is that you get some great trade ideas. Your upside is unlimited because you'll learn the skills that you need to be profitable. Check out OneOption.com and see for yourself.